So let's get a little bit technical now. What are some key levels that you're looking at for certain markets?
Yeah, so if we look at the FTSE 100 first, it's actually a market, although it's gone sideways, it's respecting market structure really well. So by market structure, I mean levels of support and resistance. And the fact that it's bouncing from support and resistance nicely over the last 12 months means it's a sort of trader's market, better for short-term traders. Some interesting levels to watch on the FTSE right now. The market's actually testing those banking crisis swing lows at 7,200 that formed in March. So it'd be interesting to see how we're responding to those levels. If we break and close below those levels, the next major area of support is 6,800. That's a key area that's been formed by a number of swing lows throughout 2022 and 2021. If we get down to those levels, that's a level, regardless of if you're a short-term trader or a long-term investor, you want to be paying attention at those levels. If we look at the S&P, it's a very different technical picture because the market's in a nice looking uptrend. The key thing to bear in mind with the S&P is that the market had a shocker in 2022. So we're clawing back against those 2022 losses. So it's important to look left on your chart, look back at the structure. That might give you some clues as to where the rally might end. Couple of levels to watch out for on the S&P is the March 2022 swing highs that formed. That's a 4,600. And then above that, we have those key trend highs that formed in January 2022 at 4,800.
It's interesting. You mentioned the resistance level on the FTSE 100, the banking crisis. We just saw some news today, which is Wednesday for the time of filming, that UK banks have passed a kind of stress test. That Andrew Bailey has said that they're more resilient. Do you see that affecting those levels at all, or should traders be keeping an eye on the fundamentals as well as technicals?
Yeah, when you start to marry up fundamentals with technicals, you create a very compelling trading opportunity. So certainly we have touched those key structural levels at the 7,200 mark. We start to combine that with key reversal patterns. Then you can start to create compelling trade setups, whether you're trading the indices direct or whether you're then looking at sector level stop plays within the FTSE 100.
And I guess, could you kind of relate that to the S&P 500 as well? Because obviously we had the inflation data today. It's dropped down to 3%. They've potentially got inflation firmly under control. Would that then be kind of testing the upper limits of the S&P 500, those previous highs?
Yeah, and the S&P's chart really shows you the difference in stories that are playing out here with inflation and the data that we've just seen in the US. You know, that's a key thing, is that the UK hasn't got to grips with core inflation yet.
Yeah.
The US looks like it has. It's also worth paying attention to the gold market, because if we're coming to the end of the Fed rate hike cycle and we have this heightened geopolitical risk, we're talking about broad tailwinds really for the market, but there's certainly potential there, especially if we do see an escalation in that geopolitical risk in the second half.
Okay, thank you, Tom. Well, let's see what the rest of the year has in store for us, and let us know in the comments what you think is going to happen in the rest of 2023.